Alright, welcome to another weekly outlook video. I'm just gonna jump straight into it. This week was actually very exciting for me personally. It was a great start to the year. I know technically speaking I started last year. I started trading properly last year and I had many good weeks and months even at a time. And then this year happened. Last week I started trading again. I started checking the charts 2 weeks ago, but I started trading properly last week. It was more of a break-even week for me. It was actually properly a break-even week for me last week, even though most of the trades that I was participating in reached their drawn liquidity, just never gave me an entry. This week I was a little bit more aggressive with it, and yeah, I was aggressive with my entries, and some of them I didn't demand extreme discounts or extreme premium levels for me to be in the move. So yeah, so personally I did actually capitalize on the movement this week and did not wait too much. Anyway, I'm going to cover a few things that has happened last week. Well, in the time of this recording, it's actually this week, and I might upload this video this week as well. But anyway, it's fine. Yeah, but the price action from the beginning of the week on the 20th of January until Friday the 24th, right? So these 5 days, I'm talking about this price action. On DXY, we can see that price was clearly bearish, but before that, it wasn't the easiest thing to read because we opened up with this gap down after the bank holiday and we expanded higher. I wanted to see us continue bearish. That's why I looked for that to be a simple liquidity sweep, displacement lower, then continuation lower was what I wanted to see, and we got exactly that. Even looking at this 1 hour chart and keeping in mind that this purple box or purple area is our draw on liquidity, I think anyone trading this market maker sell model would actually agree with me. So firstly, this area, of course, we saw was the 4 hour CB. So if you had the patience, the endurance, and waited all the way till Thursday to execute your first trade, just because you want to see structure align with time and price, right? Just because of that mere fact, you could have just waited, drawn out your range, because so far this is what we would have had in the week, right? Notice how, let's just change this to OTE. Notice how the high of the retracement is literally the golden zone of our OTE. So if you had waited to trade the dollar all the way till Thursday, which is what I did, you would have capitalized on the move with a very low resistance liquidity run. We didn't hesitate, we didn't slow down to even come down all the way to the other block that we highlighted from the high time frame. I believe I did highlight it in the previous video. If I didn't, I'll cover it here again. I just want to quickly go through this past week's price action. So yes, price displaced lower, giving us a shift. If you did not enter this OTE entry, this golden zone right there, if you didn't have any trades there, you would most likely be looking for trades from here, right? The CB that was created, that broke a swing low and continued to displace during the Asia session. So yeah, this was a very good trade. I actually took this trade, and that was a trade that that gave me the most profit for this week. So yeah, OTE, displace, retrace, continuation. We actually tapped it the first time, and then we got a liquidity sweep, then continues lower. So this was very clean price delivery, in my opinion. Maybe for some other people, not really the best. Now we're in a very weird area, a crossroad if you want to call it that. Let's just leave this on for now, just because it looks pretty. I might even use this for the thumbnail. I know you guys don't notice the pictures in the thumbnails because it's all blurred out, but it's usually my top pick for the week, or best in this case, in this specific case, it's gonna be my best price action for the past week. Usually, if you pay attention, it's usually my top picks for the week. Sometimes those screenshots are not even in the video itself, which is crazy, because why would I use a thumbnail of a trade idea that I'm seeing for the week ahead and I don't even cover it in the video itself? Anyway, so we have this price action, right, which is really cool. Let's jump over to the higher time frame, starting off with the daily. So on the daily chart, you'd notice right there we had a BC. If you remember in my previous weekly outlook video, I don't even think I covered this in the weekly outlook video, this portion, me wanting to be bearish and stuff. I don't know if I covered it in the weekly outlook video. I probably just only covered it in the live stream. So if you don't attend the live streams, just take this as a sign, you know, to turn those notification bells on, and keep in mind that I'm likely gonna be live during London session. Rarely am I live in the New York session, but usually the London session or the crossover to New York, but not the peak of New York, because I'm currently in the London session time zone. So yes, the fact that we displaced away from this inverted gap, this area where we have a gap, we have a gap, we have a gap, I really wanted to see it support and push higher, right, clearing that buy side liquidity. But the fact that we displaced through it after the bank holiday, retraced, and then started rejecting, this was the indication I needed to tell me that we are coming to these relative equal lows, or these low resistant liquidity lows, right? I have this trend line right here. So these lows are not just any low for me, because when we go up to a weekly time frame, it's our fair value gap with the order block, right? It's the fair value gap order block combination area. This was the sensitive area that I said if we're gonna continue higher, we're likely gonna do it from here, right? Price is probably gonna come down to this fair value gap plus order block area, then continue higher. So it was my focus for sales. Obviously, we have not started the buy, should I call it trend? We have not gotten a change in the state of delivery for us to start buying, because this is a weekly PDRA, right? So for us to get a confirmation, we need to see our confirmation from the 4-hour. A confirmation in my books would look something like this. Firstly, we would need to disrespect all these bearish candles. So I don't even think this one candle is enough to even make it to be more demanding. I'm going to do this. Let's just style that to make it more visible. I would like price to push up completely, disrespecting all these series of down close candles, because at that stage we would have disrespected this CB, would have now created a proper bullish order block that price could retrace on and continue higher. We have so much room to run to the upside that if indeed this PDRA is gonna hold up for higher prices, this waiting for this confirmation is definitely worth it, because you could look for pullback, then any other pullback you just capitalize on the move up. There's no need to try and catch the reversals of every move. You could just catch the continuation. That is a very simple thing that I try to live by, or try to stand by. Anyway, quick little rant here on the 9-minute mark of this video. Something I noticed is that there's this weird competition or statement or whatever you call it that's been thrown around the internet and social media, especially for ICT traders. They have this thing of saying that 1-minute charts is the way to go, and then other people are saying no, 1 minute is just a distraction, go on a high time frame, 1 hour, whatever it is. Like, those unnecessary arguments. And I'm not gonna lie, I trade multiple time frames. Sometimes I trade as a swing trader on the 4-hour for my entries. My targets are on the monthly chart, you know, and then other times I'm an intraday trader where I do most of my analysis on the weekly, monthly, daily, and then I look for executions on the 1 hour, but I refine it using the M15. If the M15 is not giving me what I want, that's when I go to the M5 and 1 minute. There's nothing wrong with those multi-time frame analysis. So I think the debate has come because people forget and don't realize that it's all about multi-time frame analysis, not just sticking to one time frame because because ICT teaches us to execute on the 1 minute. Everybody wants to jump in on the 1 minute. They forget that during the core content series, we have different types of traders. He covered all those types of traders, and you don't have to be on the 1 minute. You don't have to be on the 5 minutes. You can just take the 1 hour, even as an intraday trader. Looking at this move to the downside, for example, this move happened in 1 day. You could have woken up in Asia, depending on your time zone, right, in the world, or you could have just set an order for it. In 1 day, we moved to a POI with a proper entry. This was during Asia at 8 p.m. The displacement happened, and already during London at 3 a.m. we're already reaching the order block. So even as an intraday trader, nothing here is telling me to go down to the 1 minute chart. I didn't need to. I just set my orders. I woke up, I saw that I was tagged in. Before I had lunch, I saw that my targets were already met and I was already out of the trade. So literally, you don't need all of that. My point is, there's no point in the argument for whether sub 1 minute chart entries are the way to go or not. Like, you could just take a trade as long as it makes sense in this time frame. Take it on this time frame. No argument, no fuss, no reason to stress yourself. If you know yourself that you're busy, that you're not going to be focused, that you're not going to be on the charts, or you just have obligations in life, what is the point of even focusing on the 1 minute charts when you know you can't give the charts your full attention? Go on the time frame where you know it's a 1 hour chart, it's a 4 hour chart. You know that you can come by later and not much of a difference would have been made. You can make decisions based on your lifestyle. If you know that you're not even free enough to check your charts within the day, then why not switch to a swing trader where you could just find your entries on the 4 hour, know that you're likely gonna hold the entire weekly range, and yeah, actually wait the entire weekly range. Maybe on the weekends are the only time you could check your charts, see how far your P&L is, check what structure has done throughout the week, see if you're still on the right side or not, and make a decision whether you should continue on the trade or terminate it. It's as simple as that. Trade management, but basically longer time frame. Anyway, that was a very long and unnecessary rant, so let me just continue before I become ICT. So that's my condition, the condition that I'm looking for us to now switch to being bullish. Right now we are still in a downtrend, and there's something very interesting that I actually saw based on what Sniper shared over the weekend. I think he shared it on Friday. I'm not sure if it was on a Friday or before then that he shared it, but he shared his EURUSD chart, and it made me think of something different, something opposing my initial bullish bias on the dollar. Made me think, wait, actually the dollar might remain bearish for some time, because when we switch quickly to an even higher time frame, not the daily, not even the weekly that I had as a target, this swing high here in the weekly, but literally the monthly. When we go to the monthly chart, we will notice something very interesting. Firstly, we have tapped into this monthly fair value gap, right? That's something to keep in mind, that we are indeed in a high time frame PDRA, and a very high time frame one at that. It's a monthly chart. We also have a monthly CB up here. So I'm thinking, if this could continue higher, there's a chance we could continue all the way high to these relative equal highs up here, right? They're not nearly close to being equal, right? But they are relatively equal. That's an area that maybe some supply demand people are highlighting like this and considering it to be a strong resistance, right? So we could literally bounce off of this discounted fair value gap. This is accumulation. This could all be a manipulation for us to finally displace up, breaking the 1.14 level finally. Who knows? Euro could do that this year. But besides all of that, besides those targets, we have this CB here that price could also use to continue lower. So we could bounce into this, then continue lower, right? That's a quick, easy to explain internal to external range liquidity, right? We come into the gap and then come back lower. Nothing wrong with that. So right now we are basically doing the same thing, but it's basically internal fair value gap retracing to another internal fair value gap. But technically speaking, it's actually external because we took liquidity to external range liquidity back to internal. Then internal, who knows, we might come back down or continue higher if the bullish momentum persists. The second thing that I noted is the fact that we have an SMT. If we look at this low right here, this swing low was created on the 2nd of October 2023. But round about this area, we have a swing low right there. When we switch quickly to GBPUSD, we notice the SMT is very clear. That's the exact same swing low. Ignore all this mess going on here. I have not cleaned up my GU chart. It's a bit embarrassing, I know, but I'll fix it up soon. So right there, we have an SMT divergence at the lows, making me think, well, obviously I wasn't the one that highlighted these facts, right? But this made me think for a second that actually Euro might actually be bullish now, because almost every ICT trader is wanting to see this weekly fair value gap combination with an order block to continue higher. Almost every ICT trader. Sentimentally speaking, almost everyone in the world, but especially in the US, are excited about the dollar, that everyone wants to see the dollar go higher, like literally. So sentimentally speaking, we're also bullish. So that makes me think that if we are gonna be bullish, we might just have to annihilate more liquidity, take out all these lows to tap into the monthly BC instead of the weekly one, right? So right there, that's why I highlighted my monthly BC. We might come down all the way to the monthly BC to finally push up. I know it's not even 50% of the range. Oh, it is. It's within it. So look, measuring this range, the 0.5 level is right there. So that could be a target. I don't know. Nobody knows the future. As I said, if we're gonna be bullish, let the conditions for bullishness be met, right? By closing above this specific candle, then we can see that we're bullish. But if we're gonna be bearish, I'm just gonna look for continuation lower to that specific swing low, because that specific swing low is where the monthly buy side imbalance, sell side inefficiency resides. So all that put aside, it's basically a 50-50 position. I am obviously, when you look at the SMT, right? When you look at the SMT, GU is a stronger one because you failed to take liquidity, but structurally speaking, EU to me looks better to be buying. I'm not even going to lie to you guys. EU looks better unless the rows get reversed and then suddenly GU looks better. When we look at this daily chart time frame, we can see, okay, I can see when I will start participating to buy all of this on GU. Because firstly, we have all these PD arrays that I've been waiting to see get tagged and never got tagged. Some of them did, some of them didn't. I can remove the big figure numbers. We can remove the previous daily low, and we can keep that for future reference, right? So right now, if we're going to be bullish, already we're seeing the bullish signs. Firstly, price has respected this bullish order block, right? When we reopened on Tuesday and the whole rejection happened on DXY, remember this whole rejection? Keep coming up, then coming back down, all that stuff, coming down, then coming back up on GU. That's the first sign of a change in the state of delivery. But let's just say you didn't participate in all of that. You waited for further confirmation, or you are waiting for further confirmation. Now we are in that area where in the weekly outlook video that I made last, I was saying that I am bearish in this at this point. A fair value gap in a premium with an order block, the set of these two up close candles, right? Now, do you think that the daily candle that we had on Friday, closing as bullish as we did here, even closing above the gap with these order blocks in place, Do you think that's a good sign for bearish price action? I don't think so. Personally, I don't think so. The more I speak, the more I'm leaning towards more bullish GU and EU than bearish, right? I know that I was waiting for the CSD to happen on the 4 hour, as I mentioned on DXY, but I think we're likely going to remain bullish on GU and EU for a while. So this is the first condition, the fact that we have now disrespected this CB. We have not disrespected the order block yet, because the high of the order block, the two up close candles, is right there. We have not closed above it. We have not even swept it. So the second thing I'm waiting for now is a bullish fair value gap. If we somehow get a new bullish fair value gap somewhere here, let's say we let Monday's price action print, probably going to be a pullback of some sort, and then somehow we get a fair value gap get created somewhere here, then I'm definitely going to be bullish, because if we're bearish, we shouldn't even show any bullish intention. We shouldn't create new bullish gaps, in my opinion. Of course, maybe other people might believe differently, and of course circumstances always change in these markets. That makes me also change my mind in certain with certain conditions. So yes, I'll wait to see, leave Monday's price action to play out, then most likely going to participate from Tuesday if and when we create a bullish fair value gap for continuation higher. Of course, I already said that EU to me is a little bit better, even though the SMT is basically showing that GU is a stronger one. Alright, but EU has cleaner price action because of this. Looking at, okay, let's just first go to the monthly, then weekly. Now we already established where the SMT is, right? The October low compared to January's low, right? That's the SMT divergence. Let's actually add SMT there. So yes, looking at this weekly chart, you can see the next swing high is right there. That's where the monthly CB is. So if that's our target, like if that's indeed our target, going down to the daily time frame, I hope you could, I don't know, see what I'm seeing. Even though this was the weaker one, this is the one to me that has a better structure, because firstly we got a sweep of liquidity there, right? We meandered around a little bit, then we displaced right there on Monday the 20th of January. Got a massive bullish candle. Tuesday came down as much as it could. Well, I'll show where it came down to on the 4 hour chart, but let's just pretend we only have access to the daily time frame, right? But this push to the upside, closing above these candles, the bodies of these candles, let's just thicken that a bit, make it as bright as possible. Right there, that white line, we had these equal body highs, right? This to me was once a bearish order block. This to me was saying when price came down to this bearish order block, fair value gap, you could look for continuation sells. Now we have disrespected this fair value gap, obviously, right there, and now we have disrespected the order block. The chances of us continuing lower is becoming slim. Right there on Tuesday, when we rejected away from this 4 hour area, which I'll show you guys in a bit, was really showing me that no, I think price is going to be bullish. And now price really started rejecting away from this white line. This is the ICT breaker. That's what I was trying to get to. This is the ICT breaker. So right there, this whole area is the breaker, because it took liquidity, displaced, got a shift, market structure shift, and now we can complete the market maker buy model. So for me, this is why I preferred EU over GU. It just makes sense to my eyes as compared to GU does, even though it might be the weaker one. So yeah, the same rule will apply here. We have a CB right there on the left, pull it out in time, we've disrespected it. Now I'm waiting for a new BC to be formed this side. Let me remove this. Actually, let me put back the equal highs, which is also where our buy side liquidity was, right? Remember the weekly target, this purple area, the weekly BC, which in this side was that exact swing high. So when we go down to the 4 hour time frame, you see how clean this was to me. I can now remove this white line now that I'm done trying to show you guys what an ICT breaker is. Not that you needed to know, because most of you following me probably already know these PD arrays. So looking at this was just beautiful in my opinion. I participated in this move up to the equal highs right here, but I did not at all think that we were gonna continue higher. I actually kept on telling you guys that I wanted to sell this order block. Remember this specific order block when we closed below it? I even spoke about this on a live stream, and I even spoke about how I wanted this high that was swept right there to be the last time we sweep highs. I wanted that to be a sweep and then a continuation lower, right? I was in this sell, my stop losses at that high. Of course, this did not play out well after the whole Trump situation and after the whole bank holiday situation. We closed above it, so I got tagged out. That was a stop out, but it was fine. Went to the journals and that was it. But right there in the move up, we created a very nice PD array. We had this order block, right? The white one, the white candle, the last down close candle, the major one that I see before the expansion up, coupled with a fair value gap. Notice how price came. We did not, it was so bullish that we didn't even get the bodies of a candle inside of the fair value gap. We only could wick into that specific order block before continuing higher. And all we did was just literally spooled all the way to the buy side liquidity. We had a new fair value gap created here higher, came down, took liquidity. It was on a Thursday, the same Thursday I was telling you guys about on DXY. So let's say you were measuring the trade from EU, you'd have gotten in on this liquidity sweep, because even though we swept lower, where did we end up reversing from? Another order block right there. Let's again thicken that and brighten it up a bit. Let me use a different color right there. So price came to this last down close candle after a liquidity sweep. If you wanted that one shot, one kill, and you actually waited for the whole week and you were looking at your dollar chart at the same time, this could have been your one shot, one kill where you targeted the buy side liquidity. I know it's a simple 2-hour trade, but that's all you need. This is literally all you need. You do not need to have a crazy 10-hour trade or week or whatever, because with enough capital, this is more than enough. Even without enough capital, you have many moves like these happening throughout the year. This is a 4-hour time frame, guys. Like, just keep that in mind. You could have held the full weekly range if you got in from there on Tuesday, because this price action was too beautiful. Knowing that it was gonna clear that buy side liquidity was not something that I had doubts about. So yeah, this is the market maker buy model that I participated in this week. And now when we zoom out a little bit more, if I remove this buy side liquidity, what does that look like? It looks like we are not done yet. It looks like we are not finished with the real one, because that's the monthly CB, and the level that we came from is over there as well. We could even round it up to the psychological level at 1.065. I don't know if you guys see that right there. Edit, go to coordinates and change this to 5. Copy this coordinate and label that as a psychological level, so we can just put PSY level and delineate what the level is right there. So we could target that as a psychological level. Going through that, we have the 1.07 level. Very, very perfect there. So yeah, those are my targets for next week and the weeks after. Now, how are we gonna get an entry? Well, we'll buy every pullback. I've already given one, which is on the daily. We wait for a new BC to be created, then we participate from the BC. We could also keep in mind that we have this inverted gap, right? So price could just decide not to even create a new BC, and you could just wait for us to retrace down to it, then buy this up. This is enough. This is good enough to me. You put your stop loss in the last swing low, which is right there on Thursday's low, and that's it. That's the safest stop loss. If you're just gonna use a daily chart, find your trade, wait for a pullback, and then continuation. That's all. don't have to crack your head about it. But of course, if you don't want all of that, you could just wait for a lower time frame entry. You could wait for a confirmation or whatever it is. You could wait for this order block, this last down close candle after we took liquidity to push up, you know, or you could wait for the highest candle, which is right there. So it could be that premium BC over here that you look to enter. I don't know, whatever your entry model is, whatever confirmations you're looking for, you could use that to buy. But of course, the same way that we had in dollar, I said if we close above this specific Thursday the 23rd candle from 7 p.m, when we go over to DXY, Thursday the 23rd from 9 p.m, this is the candle right there. If and when price decides to fall and close below this low, this candle low, then we're likely gonna be bearish. Because even at that point, the possibility of creating a daily bullish gap now becomes negated. So if we're going to trade and close below this low, we're likely just gonna continue lower now to go clear the sell side liquidity, right? But right now I'm leaning more towards buys, so that's technically my invalidation point, closure below this candle low. But otherwise, I'm still remaining bullish until the psychological levels that I mentioned. I really think we could get to the 1.7 level. I've been eyeing that level now. Enough for me to put it down on my chart. So let's do that, and just do that. No need to say much about it. I really think we can get to that 1.07 level. But anyway, we'll see what price has for us this week. This weekly outlook video is getting really long, and I think it's probably because I'm filled with so much energy right now. I'm probably gonna crash later, but for now I'm filled with energy. So yeah, let's continue. I'm done with euro, I'm done with pound. I'm not really gonna go through AUD NZD and NZD US, wait, AUD USD and NZD USD, the Kiwi and the Kiwi and the Aussie. I'm gonna go through them. The same idea, just find your PDRAs. That's it. Moving on to NASDAQ, the indices. Let me remove that. Yeah, we just remained bullish this week. Of course, not the best price action the last 2 days, but this week, yeah, but then we just remained bullish. Same weekly outlook video idea from the last one, from the last video, so it'll basically sound the same. Equal lows to keep in mind, sell side liquidity to keep in mind, but right now we have negated this CB, so this has become an inverted gap. We came down right there on Thursday, made the low within the inverted gap, then continued higher after touching it one more time on Friday. Continued higher, giving us bullish signs, right? But now we've created a new very important area, this volume imbalance right here, and a fair value gap. The fair value gap is the blue lines, right? That's the fair value gap area. And coupled with all of that, we have this breaker, right? Because notice how we had a low put in, a new high, then we came to sweep that low, right? This is the sweep where the swing low is formed, displaced away. Now it's a breaker with a fair value gap combination. So right now my POI is this area, this entire highlighted purple area. So this is where I'm thinking price is gonna bounce from to make a new all-time high. That's it. It's as simple as that. I'm looking for a retracement into this purple highlighted area for a continuation higher because of how price action is being printed. On the weekly, I don't really have much to add. On the monthly, I don't really have much to add, right? There isn't much to add from these other higher time frames. So you could find your entries either on your lower time frame or wait for specific sessions or specific days, confirmations and stuff like that. It's all up to you. It's all up to you. So yeah, right now I'm looking for bearish price action into the POI or purple area, and then I'm looking for bullish expansion out of this purple area. That's it. It's a very simple thing. So yeah, I also like the trade that I took on NASDAQ the only real trade I took on NASDAQ, which just so happened to be on Friday, right? Here at the highs, we had an SMT divergence with ES, because ES high of week was definitely not Wednesday, because this high was put in on Wednesday. Friday we came, failed to take that high. When we switch over to ES, we noticed that we actually made the high on a Friday. So we continued grinding higher and higher even till Friday on ES. When we look at NASDAQ, we didn't, we failed. So I was looking at the M15 when I got back home, because I was not in front of the charts the whole time. And I noticed something very interesting. We created a breaker. I don't think I have to show you guys what a breaker is again, right? But we've got a high, a low, new high. Broke lower, that's a breaker. This whole white candle right there, that's our breaker. And I was looking, this breaker was respected by pushing up into this CB. We broke again, another fair value gap. At this stage right there, this was when I alerted my group. I alerted everyone in my group that I'm entering sales right there, because this was more than enough confirmation that I needed. Even before all of this, I was waiting for lunchtime, and I noticed something very interesting on the 1 hour, because when I got home, I was already on my 1 hour chart. I noticed right there that we had an SMT. That's how I was able to see the SMT, because I was on a 1 hour chart. It was very easy. And then I thought this bullish candle that was created at 9 a.m. could be the order block we used, right? And at that stage, we're printing out the 10 a.m. candle. So I waited. When the 10 a.m. candle closed, we closed below the previous 9 a.m. one right there. So that made me now think and look at that 9 a.m. one as the order block, and notice how the very next candle at 11 came up, used it as an order block to displace lower. So if I was framing a trade idea, which is what you guys saw me delete earlier before doing this outlook, it'll be like that. It'll be exactly from the order block right there. Jeez, my mouse is all over the place today. But yeah, it'll be exactly from the order block like so. And my target is very clear, the place, the POI that I'm looking to long from, right? So it'll be in the beginning of that blue line. So this is the trade I'm currently in. So if you want to ask me what's my bias earlier on in the week, it's bearish. I'm bearish. I'm in it. I'm in the trade. And yeah, I'm looking for a quick 3-hour trade. Then from this POI, I'll look for confirmations like SMTs, TSDs, MSS, all those funny alphabet acronyms and whatnot, because of ICT Concepts. It's crazy. But yeah, all those funny confirmations for me to be bullish again to the all-time high. So yeah, I'm looking for sells into this, then buys out of this. So yeah, I think that's it. That's basically my idea on NASDAQ, and that's the same idea I have on ES, right? It's just that we're very close to the all-time high on ES, that's all. So if you're looking for the one that's more bullish, you could probably focus more on this. This is the same volume imbalance. I don't even know if ES is capable of reaching that same volume imbalance to continue higher, or is it just going to press on from here? Who knows? It could reach that same area. It's not even the same breaker. This is the breaker here. But yeah, we could come down to this volume imbalance and push up, or not. Who knows? So let's just wait and see how price prints out in the week. Either way, I always look for lower time frame entries unless I was a swing or position trader. And yeah, Russell, I don't really have much to add right now. I haven't been looking at it for some time, and I haven't seen anything too enticing on RTY. Not now, at least. I think the other two is more than enough. Anyway, yeah, that's all. Let's just add a special one in the end here. Gold, I'm bullish. It's as simple as that. I've been bullish from this exact area. I got stopped out, but I still got in again in the very next day. This exact area, I was telling myself I'm going to take price all the way to that buy side liquidity. And price got there on Tuesday the 21st. Got there, and now we've gotten into this premium gap. This was the next target, then the premium CB. Then going through that, I had this 2774 as my next target, because that's this last up close candle before we displace down. So if we're gonna act as a resistance in anywhere, it will be from that area. take it as an order block, take it as a demand area, whatever you want to call it, right? But I was looking at that area for a possible reaction. But this was a very gold was a very nice pair to trade. Yes, I missed a lot of trades because I wanted to find that precise entry. I wanted to catch the absolute low, so I missed about 4 entries in this run up. It was actually very sad, but I did participate in most of it, and it was very rewarding and very easy. I don't think I actually got a sell hit on any trades on the way up. Anyway, that's what happens when you trade in the direction of the market. Let's go to the weekly chart. Nothing really enticing for me here. Daily chart, I already mentioned that area could act as a possible rejection lower. Then we could see this swing low as a target, right? Because keep in mind that this is still a whole fair value gap here on the daily. There's nothing that stops price from doing this, then continuing to the 2800 psychological level that I highlighted, which is above the all-time high on gold. So I'm also bullish on gold, but I want to see if we're going to take liquidity first, or are we just going to continue running up. When we go down to the 4-hour chart, yeah, there's a chance that we don't even retrace down to take that swing low. There's a chance that we just use this bullish fair value gap here on the 4-hour to continue higher. Of course, if we disrespect this gap, then we're definitely coming for this low. Alright, or let me not say definitely, most likely going to come for that low. So yeah, but then short term, I do see some bearish structure being formed. You could watch this rejection block right there. You could watch this rejection block early on in the week. Price could come up to it, then you could look for sells from there. If we're talking about rejection blocks, we also have another one right there. So you could frame an idea that looks something like this to sell into that. I don't even know if that's gonna work out or not, but yeah, it could look something like this. TP there, SL there. That's a nice quick and dirty 4R. It could even just decide to be bearish from here. You know, gold can be dramatic. We had all these lows that were never taken, equal lows even at some point. So it could just decide to run all the way to down there, making it to be a 20-hour trade. But yeah, who knows? Follow price. Just follow price at the right time and you should be good. Anyway, that's all. Thank you if you actually stuck around till this point. I really appreciate it, honestly, because I know I was rambling on and on and on without really stopping for basically 40 minutes, 42 minutes at this stage. So I appreciate it if you made it to this end. And if you did, I mean, why not just leave a like in the video? If you like the video, of course, you don't have to like it. If you like the type of videos I make, or you need clarity, of course, just let me know in the comment section. Nothing wrong with learning. It does not matter at what level you might be. It doesn't matter what you might be pursuing. It doesn't matter what answers you might be seeking. I'm here. I'm here to be used for anything at all. Literally just ask. There's nothing wrong with asking. I will clarify anything that needs clarification and teach whatever needs teaching. So yeah, reach out. I have nothing but free time. Well, not always, but mostly. And yeah, like the video, like it, subscribe. It's free. It really is. I'm not trying to scam you. It is free. Anyway, good luck, good trading, and make the best of the week. Bye bye.